I want to welcome everybody. I hope that music got you going. That music is way too cool for me, but at least it's a nice break in your day, so you get to actually enjoy some music. So I am going to jump right in. I am Deb Zahn, and I'll explain who I am in a moment and why I'm talking about this. But this training is how to price your consulting services. So if you don't know how to do it, or you're struggling, or you're trying to figure out if you've actually hit the sweet spot and you want to learn more about how to do it, and you want to learn more about the nitty gritty of pricing models, you are absolutely in the right place. So let's jump in. Here's what you're going to learn if when you're in this training. First and foremost, the first thing everybody has to do is pay attention to any mindset traps that can cause you to underprice yourself. And there's a whole lot of them, but I'm going to hit on two of the most common ones that if you're able to get past those, you will increase the chance that you actually hit the right price. We're going to talk about the pricing process itself. We're going to talk about picking among different pricing models, because there's not just one way to do it, determining your price. And then we're going to hit a little bit at the end about once you figure all of that out and you have to talk to prospective clients about your price, how do you do that? And how do you overcome any objections they might have? And then I definitely want you to stick around for the end, because I am going to give you a special offer where you can get more help with pricing and all things related to your consulting business. So let me say a little bit who I am so you understand why it is I'm talking about pricing. So I am still a practicing consultant. I have been doing this actually just shy of about 13 years. And in that time, I've generated over $12 million in consulting deals. And I routinely bring in 6-7 figures a year. I got a steady, reliable pipeline. I did not have any of that at the beginning. So this is something that I had to learn how to do. And over time became known for being able to close deals, and particularly high value deals with hard to get clients. That was kind of the thing that I was known for. And obviously that relates to generally closing a deal, but it also relates to finding a price that's going to be the right price and getting folks to say yes to it. In that time, I've coached over 100 new consultants and consultants who've been doing this a while, who have the goal of really trying to fast track their success. And what I do is I help them with that. So I am the CEO of the Craft of Consulting. And so that's what I do in addition to do direct consulting. And I'm also the host of the Craft of Consulting podcast. So if you hadn't had a chance to listen to that, definitely encourage it. I have lots of great guests on talking about all kinds of insights and wisdom about their consulting business. All right, let's dig in. Let's start with the mindset traps. And I will tell you the reason that I start with mindset traps is because your mindset, which is basically what you believe about the world and what you believe about yourself, your thoughts, your patterns of beliefs, your habits, all of those things tend to drive decisions that you make and tend to drive the actual actions that you will take. And so if you aren't mindful of your mindset, you might end up making some decisions and taking some actions that undermine what you're trying to do with your business. And you saw something pop up there that said, share your questions. Definitely want folks to jump in and ask questions as I go along. If people have questions, I'm actually going to answer them as I go along, so that this is really an interactive process. All right, so back to mindset. So these are the two that tend to come up more than anything else. There's definitely others. Unfortunately, there's definitely others. But the first is the lack of confidence. And a lot of that comes from the fact that this is probably the first time you've had to figure out a price. So how would you know how to do it? And there isn't a single source that you can go. I don't care what anybody says. There is not a single source that you can go to that tells you, if you do this and you do it here and you do it with these folks, boom, here's your price, because there's just too many variables that go in your price. And I'll actually be going into those. So it makes sense when you're doing something for the first time and there isn't really anything that you can turn to that gives you anything specific enough that means you don't have to figure it out. It makes sense that your confidence is going to take a hit. if you are approaching consulting, or you're a consultant and you know you're good at what you do, you know you can help people, you know you can achieve results, that's a fabulous part of being a consultant. But then there's the business side of consulting. And if you've never had to do that before, you can expect that your confidence is going to take a hit. And it's okay, as long as you don't believe what you're telling yourself about reality. So if you just look at it and say, wow, my confidence is taking a hit, instead of, oh my gosh, those stories are true, and now let me make decisions based on that, you can end up at the right price. The other side of it is perceived scarcity. And I use that term very specifically. Perceived scarcity isn't actual scarcity. So there are conditions in the world that are actual scarcity that people experience, and that is a real thing. And this is different. This is where your mind has told you a story about how much business you can actually get, or how much business is there out there that you could really actually get. And so what happens is if you think, oh, there's not enough out there, it could cause you to make decisions about your pricing that it basically lead you down the road of competing on price, which I'm going to talk about in a moment. And if you position yourself as a bargain because you're so scared that there's not enough work there out for you, you're not going to make the income that you need. So one question that came, I see a lot of familiar names here. Hi, everybody. One question that came in: how do you do value pricing when the client is very inexperienced in our field and there are a lot of unknown unknowns before the project starts? Fabio, I'm going to say hold that question, and I'm going to have my producer pop that back up when I come to the part where I describe what value-based pricing is. And I actually will give you examples of when I wouldn't do it, and then I'll answer that question as well. So hold that thought. I will definitely get back to that. I want to make sure everybody knows what value-based pricing is before I do it. So how do you get out of those mindsets traps? So the first is you have to expect that they're going to happen. There's nothing strange about you. There's nothing to be ashamed of. If any mindset trap pops up, if your confidence takes a hit, if you have fears, if you have doubts, any of those things, those are really common. I know very few consultants who never had them. So you have to know that part of the business of consulting is you got to mind your mindset. You actually have to pay attention to what's going on in your head and intervene if it's taking you down a bad path. One of the things that I like to do, and it particularly as it relates to pricing, is constantly go back to the value for the clients that you most want to work with. So if you're really clear about the types of results, the type of experience that you can give the folks that you most want to work with, your ideal clients, your buyer, whatever you want to call it, then it's easier to get out of that mindset trap because you're driven by your desire to do those things for them and to provide them with that value. And it's also evidence of what is actually true about the value you can provide, and not any of the feelings that might bubble up if you start to feel a lack of confidence. The other is on the right side is get intel about reality. And intel about reality essentially means that you have to actually go and get evidence of what is actually true. So you have to go out and ask some questions from other consultants, from people in your field, to get an idea of, well, what prices are people charging? Kind of what's the range? What is the market actually looking like? The more evidence you get, the more you can replace that, what reality actually is, with how you might be feeling. And then ultimately you have to test it in your market. And that's very true with your price. And I'm going to talk about that in a bit in terms of what that looks like when you test. I want to hit a couple questions here. So Teresa asked, I thought by perceived scarcity, you think they don't have money and you want to help them. Actually, that is a version of perceived scarcity. That's a really smart way to think about it, which is you might think that clients can't afford it. And that came up recently in my membership, where someone is just starting to work with nonprofits. And I work with a lot of nonprofits. To me, that's, heart-centered mission work. I love it. And so as soon as she heard nonprofit, she assumed that meant that she was going to have to discount her price because clearly they wouldn't be able to afford it. So she had a notion of scarcity related to their ability to pay. And so while we were on a group coaching call, and while we were on a group coaching call, I said, look up their 990s. That's their publicly available financial information, because the range of what assets and income that or the amount of money that nonprofits have is actually pretty vast. So while she's on the group coaching call, she looked it up. She's like, whoa, hello. And it was much higher than she thought. So she had to actually interrupt the story she was telling herself, which is, look, they're just, not only is there not enough work, but they aren't going to be able to pay me what I'm worth. So if I want the work, I have to discount. She had to interrupt that. And then she had to interrogate to find out what was actually true. And when she looked it up, she was pleasantly surprised that they were likely going to be able to pay more than possible. And I know someone said I discounted on a discovery call. Yeah, I used to have essentially what amounted to a tick, and I would discount all the time and for no good reason. So somebody said, will you talk about introductory seed pricing to get your foot in the door? Ooh, I love that one. That's a great one. So, and again, we're kind of anticipating some of the things I'm going to say later, but I'll say something quickly about that because I don't actually have this in the presentation. So one thing that you can do is that when you're in a discovery process with clients, and if they say that they have budget limitations or they indicate in some way that they have some price sensitivities, that's fine. The thing to remember is those are their limitations. They are not your limitations. And so it might be that you could offer a smaller contract that would have, less of a price that still gives them something of value, but it's a smaller engagement so that they still get something that they want, but they get something they can afford. And I often like doing that because it also gives them a taste of what it's like to work with you. And if you give them excellent results and if you give them a stellar experience, they will often find money or move around things in their budget to be able to do more for you. Or suddenly I have found sometimes those price sensitivities disappear, because what they often are is they are nervous about spending a lot of money and not knowing if they're going to get something out of it. And so some folks are mentioning in here an assessment tool. Yeah, I have actually used an assessment tool as an introductory offer. It works great because it's still valuable to them, even if they don't ask you to do anything else. But chances are, if you do an assessment and if you uncover, gaps and risks and things that they need to be able to address, then it's an entree to potentially be able to work with them more. So an assessment, I think, is a great introductory offer. I've done strategy sessions as an introductory offer, particularly if, there's a whole lot of top chefs in the kitchen and they can't agree on what they want. I will offer to put them in a room together and help them figure that out as an introductory piece of work. And then when they walk out of those meetings and they're clearer than they've ever been, chances are they're going to want to work with me again. Okay, so let me keep going because I want to say some things about determining your price before I get into the details. And the first one, which I think is the most important one to know when you're pricing, is that price communicates value. And interestingly enough, there's been lots of studies done on this where people take a shortcut in their brain that when they see a higher price, even if they can't afford it, they tend to assume that it is more valuable. Doesn't happen all the time, but that's the tendency that people have. So one thing you have to think about with your price is whatever you put it at, you are communicating the value of what the client is ultimately going to get. And so if you place yourself in the bargain bin of prices, a lot of times what clients will experience is they think that they're going to get less. They might say yes, they might say no, but they think that they're going to get yes. So anytime you're approaching your pricing, just have that in your head of what value am I actually communicating to the potential client. The other thing I want to say before we get into the details, someone else suggested a SWOT analysis as a analysis in business, which I've done many of those before. That actually can be a really helpful introductory offer as well, because that highlights things for them that they need to pay attention to. So the other thing I want to say is don't default to competing on price. And so there are consultants out in the world that in order to get money in the door, they present themselves as the cheapest consultant. But if you go back to price communicates value, then you have to know that you're going to be communicating that the value of what you provide is not going to be as high as it would be if they went to other consultants. And so we're going to talk about positioning a little bit, and in terms of how you position yourself in your market that helps you justify your price, and then earning that position, which further justifies your price. But I would never suggest anybody compete on price. I always suggest that you compete on value, and the more value that you can provide, and value being the results that you can help clients achieve and the experience that you can give them. And if you compete on that, that is what should ultimately relate to your price. So somebody asked, how do you balance the need to test in your market and maybe offer free services to show your results, and knowing and asking for what you believe your value is? So I, as a general rule, would not suggest anybody do anything free when they first start. And I'll tell you why. Because if you have in your past work experience, or even volunteer experience, anything that you've done in the world that relates to what you're going to be doing, and you've been able to contribute to outcomes, or you've been able to achieve outcomes, and that's what you can help prospective clients with, that's valuable. And if you do them for free, then you're saying in your market that you don't think those things are valuable. And I understand the desire to want to sort of test it at the beginning so you can get results and you can get things like that. But your results, and I actually talk about this later, are based on everything that you've done in the world, not just what you've done as a consultant. And one of the things that I found very interesting is a lot of clients want consultants who have actually done things in the real world, because that gives you credibility. They know that you had to do things and live with the consequences of it. And so that is often more valuable to them than a consultant that gets airlifted in, has never done anything, but they read all the stuff about it. And that's the complaint that a lot of folks have with some of the bigger firms is, you get folks in the door that aren't that experienced. So if you have experience, there's no reason from day one that you cannot charge for your services. You might have to test the field to find out what the right price point is. But if you can give them something that is truly of value, then I would charge from that from the get-go. Okay. So let me keep going here. I see that was a popular topic. So somebody said public workshops, etc., like this one, for example, with your own content. Yeah, Ellen Grace, I'm so glad you brought that up. You can do things like this where you might do a webinar that shows the value of what you do. So one of the things we just talked about in my membership is someone was offering to do a pretty impressive piece of work for free to try and get people in the door. And what we talked about instead is why not, instead of doing that, do a webinar. And we talked about different ways of getting connected with others to get a big enough audience that it would matter. And then talk about something that's valuable, that gives people something that is truly going to be meaningful to them. Like, don't hold back, be generous, but use that to draw in the business, not give away the business for free. And that type of sort of content marketing, I think, makes more sense than doing work for free and then being able to point to that work. People also talk in markets, so I never would want anybody else to hear, oh, you're paying for that? I got that for free. So they're also run a bit of that risk. Okay, I'm going to keep going here because I want to make sure we get through this. So here's the other thing I would say is underpricing is the most common affliction. So artificially deflating your price is the most likely thing that most consultants do. It's usually due to a confidence issue. It's usually not about the market. And if you're worried that what if I overprice myself, most consultants actually don't. And it doesn't mean that it's not impossible. I've seen people who do not have confidence issues, and maybe that would help them a little bit, really overprice their services. But most of the time it's underpricing. So that I would say, know that it means that you have to get information from your market and not default to whatever your confidence is telling you. As someone said, I advise clients that pricing is determined by years of experience in XYZ industry and years of outcome-based satisfaction. So absolutely, you can use that as a way to describe your value when you're in front of prospective clients, such that they're like, oh yeah, this is worth it because this person knows their stuff. If someone has less experience, there's just a different way that you have to talk about it. But being able to say, when I'm a healthcare consultant in the US, so I am able to say, I've been in this field and in the particular sectors that I'm in for over 25 years. That carries some weight. Now, what they really want to hear is, okay, that's great, but what can you actually do? And that's where the outcomes-based part of it is so important. And someone said, yeah, they're buying the sum of your experience. That is true. And they're buying your ability to actually help them achieve the results at the end of the day. And Teresa says, yeah, everybody says I'm underpricing. A lot of people do that. Goodness knows I kept discounting at the beginning for no reason. So I was essentially underpricing myself. So this actually speaks to the point that I was going to make, which is your past is also not your value today. So one of the ways that I have seen people usually try and determine an hourly rate, is to take whatever their last salary was, do a bunch of math to it, and then come out with an hourly rate. And that is not what defines your value. What defines your value is what you're able to do for clients in your market that they have a demand for and they're willing to pay X amount for. And so it's not just based on whatever your last salary was. What your last salary was that for a whole host of reasons that you had no control over. In many cases, you probably knew you should have been paid more. This is really trying to define it in your market relative to consultants who are able to achieve the things that you're able to achieve. It's also not where you do one and done. So you do the math and then you're done. It is typically done in an iterative process where you're going to apply a number of inputs to it. I'm going to talk about what some of those inputs are. And then it's not static. So it makes sense when there's a reasonable trigger to raise your price to do so. Actually, back in the day when I was used to be employed, I was in corporate. I hired a consultant who I had hired before, and she had gotten a new degree. So she had 2 amazing degrees that were relevant to what I needed. And she was still charging the same amount she was charging before. And I said, no, you gotta charge me more. I said, add a degree, add a fee. I said, that should be your mantra. And so we helped her to actually get to a place that actually made more sense. But the key is not to deflate your price because of fears, doubts, and any emotions that might pop up. And there are a lot of emotions that tend to pop up. So you don't want to artificially deflate it. You want to raise it when it makes sense, but you want to arrive at something that makes sense given a number of inputs. And we're going to go over what those are. So somebody asked, can pricing be based on an ROI number? And how do you figure out ROI if you have limited examples? So it can be. The one thing I would caution against, unless enough of it is in your control, is because I've heard others talk about, if I'm able to help you, achieve X or bring in, X amount of revenue or X amount of dollars, then you're going to pay me a percentage of that. And that comes with a financial risk. And so you have to make assumptions about the ROI, but you're taking a financial risk. I generally do not like that, simply unless enough is in your control that you feel like you're confident that you can pull it off, in which case that number should be higher. But if you don't have a lot of examples, this is where I go to literature, for example. So someone on one of my podcasts made the good point, and we'll talk about value-based pricing, and then I'll come back to what Fabio asked, is, well, what if it can't easily be quantifiable? What do you do? So if it's you're doing consulting during a merger, and what your job is trying to reduce talent loss. And there are ways that you can say, okay, what are the talent that they care most about? You know, what are those salaries? There's literature about the cost to rehire and the loss of productivity. There's things that you can go try and find that have been studied in the field that'll get you close enough to that until you get more experience and you start to see what happens in the real world. Oh yeah, thank you. Someone asked what ROI was. Yes, return on investment. No, I should explain any acronyms. And it was lovely to see another MPH on here. I am as well. So that's great. Welcome, Donna. All right. So let me go through the pricing process itself. You'll notice, and I'm going to go through each of these, that it starts with your life. And what often happens when consultants are pricing for the first time is they actually put their life at the end. And the problem with that is that you might go through this whole process of figuring out what your price is, and then you realize that in no way supports the life that I ultimately want to have. I would have to work more. I would have to earn less. I'm going to spend less time with my family, sort of all of those things that would essentially support the life that you don't want to have. So I always encourage, I love it that people are meeting each other on here, clinical psychologists. MPH is a master's in public health. Thank you, Ellen, for asking that. Or I jokingly call it miles per hour because that's what it sometimes feels like. So you start with your life. And I'm going to explain what I mean by that, because you want to make sure that ultimately what you price is fit for the market, but also supports the life that you have thought through that you actually want to have. Then you have to think through, am I doing sort of a set package of services, or am I going to be doing custom consulting? Because depending on the answer to that question, your prices might be different. Then you have to think through the pricing model itself, or the models that you hope to use. And I'm going to go through each one of those. And then you can start to play with what the price is. And then ultimately you need to test and refine it in your market till you land somewhere that it actually makes more sense and you're getting more yeses. But you're not getting yeses too quickly, because that's one thing I will say as an aside. If you land at a price and everybody is like, oh yeah, that sounds great, and they say that really fast, chances are you've underpriced yourself. So you need to go back and take a look at it again. Okay, so the first inputs are you and your life, and we're going to talk about those. We're going to talk about package versus custom decision, or both, and then we're going to dive into the pricing models themselves. So you and your life, I like to establish the threshold of what I want this to look like if I price this in a certain way and it would enable this type of income in this type of life. So you want to look at, annually, how many hours do you want to spend working versus other areas of your life? So on my consulting side, I made the decision I work 40% time. I spend the rest of my time on my other business and a lot of time doing the other things that I love in my life. But I made that decision in terms of how much do I actually want to be working, and then time spent doing the business of consulting, because you can't ignore that you have to do business development. You have to do planning as the CEO of your business. If you've got anybody who's helping you and working with you, then you've got to be able to manage that. There's a whole bunch of things that go into the business of consulting that have to be baked in, because if that ends up just being in addition to the amount of time that you're actually working on client engagements, then you're going to be working a whole lot more than you might have expected to work. I always think it's good to define what your floor is. And I want you to definitely be well above your floor, but what's the lowest annual income that you want to make? Because what you don't ever want to do is, maybe you're not making your maximum, but you never defined a floor. So if something starts to sink down, you don't know when to intervene. And so I always like to have, what's that floor look like? And then you have to think about the expenses of having the business. So I have found that the expenses of being a consultant don't have to be extreme, but you want to pay attention to, overhead. So if you're going into an office, I have one here at home, but some people do, and they like to. Any expenses, if you have to put money in savings, retirement. So I have very discrete amount of money I put into retirement. I have a discrete amount that goes into profit. And I have figured all of those things out ahead of time so that gets baked into what I'm thinking about my price. And then I want to know what my maximum target income is. And it's funny because you might think, well, I don't want to maximum. I want to earn as much as possible. That may be true, but you at least want to know, like, if I'm going to hit the target that feels right to me, what is that? And if I make above it, that's fine, as long as I'm not sacrificing the rest of my life to do it. It is also going to make you think about how you deliver services, which is a little bit separate than price, because you might think about, are there ways that I can deliver services that I can hit what I want my target income to be without having me work more? So the assessment that we talked about earlier, previously when I worked at a firm, myself and a few colleagues did the first ever product they created. It was an assessment. It enabled us to make quite a bit of money and it was really helpful to people we cared about. But it didn't require us to do a whole lot of extra work. So if you know what your income target is, now you've got something to look back on and say, how would I make that possible? All right. So you think about your life, you do all of that math, you think it through, and then you think about, okay, how do I want to deliver this? So as I was mentioning, delivery is important. And you don't have to pick either or. You could ultimately pick both. But some consultants offer a package. So it's a standard service or set of services. It's a standard product or set of products, and it doesn't vary by client. And there's different ways to sell those things, but that's what it is. And so when I determine the price is going to be based on exactly what I know it takes to deliver that. It's the same every time. And it will only change as, it needs to most likely increase over time if there's new expenses. And then there's the custom version. Now, I like having a product because that enables me to have income that I'm not doing a whole bunch of work for. I do a whole bunch of work at the beginning, but then I can generate revenue from it. But I like custom because I like new things. So this is where your services or your products would vary based on the client, based on what you agree to with the client, based on what they're willing to pay for. And you can decide which do you think is actually right for you. You also have to know what's right for your market. So package might seem great to you, but you need to talk to people in your market to find out if there is a true demand for it. And a demand means a need that someone is willing to pay for. And I've had to test this where I was thinking of a product, and I called a consulting client that I was working with who would have been the ideal person to purchase it. And I said, hey, what do you think about this? And I, of course, thought it was fabulous. So I called her and I'm like, hey, what do you think about this? And she's like, she's like, I don't think that's really helpful, but I'll tell you what is helpful. And it was a whole different, path that she sent me down. And then I went and talked to some other people until I came out with something a little more concrete. So you have to know your market once, what you want, what ultimately you're offering. And if you offer custom, you could offer like, here's the things I tend to do. And then there might be some variations to it, or it can be completely custom. So this is kind of on a continuum, but how you price absolutely depends on what you make a decision about this. So you have to know that going in. So I want to dig into the pricing models because this is the stuff that I had to learn over time. And the thing that I want to know ahead of time is there's certain goals that you want to achieve. So it's not just picking a model. You want to achieve certain goals. So first of all, you want to support the life that you want. Different models can enable different things. The other is to make sure that you get paid for all your value for whatever it is you're helping clients achieve. The last two are basically, about eliminating or reducing risk. So you want to make sure that whatever you pick, that there's not going to be further stress for you and your clients. And I'll talk about some examples of that in a moment. You also want to make sure that you eliminate or reduce the time you're spending on doing things that you don't get paid for. And an example I'll give of that, and it actually relates to the last two bullets, is if you have to constantly revisit the scope and constantly ask for more money, that creates more stress for you and the client, and you're spending time that you're not actually getting paid to do that. So you might think, oh, another pricing model would make this easier. Someone said, how do you factor in taxes as you're pricing, especially when there's potential of crossing tax brackets? Yeah, so what I do is I look at the tax brackets. I look at the business that I have in my pipeline. I make some assumptions about additional business that I'm going to pursue and that I will likely have in. And I look at, what my husband's bringing in. And I try and make assumptions about what bracket I think I'm going to be in. And then what I essentially do is, as I get paid, I take that percentage for both state and federal, and I put it in a separate bank account, so I have it. I do make estimated payments. Sometimes at the end of the year, I don't, because I want to see how close I am. But you do have to factor that in, because ultimately it's not just gross revenue, it's going to be net revenue, and you have to make assumptions about taxes. What I encourage is to not wait till the end of the year and be surprised because you did so much better and now you're going to have a huge tax bill. But you do the best you can, and then you learn over time. If you think you're going to be really close to that bracket, you might just you might split the difference and make a little bit of a higher assumption. All right, great. Well, thank you. It's nice to meet you as well. So examples of types of packages. Yeah, I can do that real quick. So an example of a type of package might be where you go in and do an assessment. And it might be an electronic assessment, it might be an in-person assessment, but it's the assessment. I'm going to do a gap analysis of your ability to do X, Y, and Z, because that's an important thing that's happening in the market right now. Everybody gets the same assessment. I do not customize it. And then based on that, whatever the outcomes are, there's a discrete set of services I offer to fill in some of the gaps that are identified. And so there might be a little mixing and matching, but that's a single package. It might be a series of trainings. So I've got someone in my membership, and I know there's someone on here that there's certain trainings that they offer, and they consider themselves a consultant, and because they got to do all the business of consultant things that other consultants have to do. But these are the trainings that they offer. They don't customize them for folks. They're exactly what they are. And if folks want to buy them, then they're basically saying, I want these 5 trainings and that's it. Those are examples of packages. And then custom is really, okay, what do you need? All right, let me figure out the best way to get you that. The example that, a lot of consultants will do strategic planning. I do a lot of strategic planning, and a lot of consultants, it's always the same thing. It's a SWOT analysis. It's external and internal interviews. It's a board retreat. It's ... And it always looks the same. And that's all they ever sell. That's a choice that they're making. I don't do strategic planning like that. I use a custom approach that I call basically a toolbox approach. I have a bunch of tools in my toolbox. Depending on what I think is important for that particular client, I will say, all right, I think you need this. I think you need this. I think you need this. And then we're going to work on this other piece together, because you have some unique needs that we have to address. And so I might pull tools that I've done from other things. I might pull, from other examples, but it's still custom. And then some custom it's brand new. We got to figure out what we're doing together, and everything is bespoke. Okay, let me make sure I'm not missing anything. Oh yeah, we have more acronyms. They're being defined. This is good. I like, in my humble opinion. Okay, so let me keep going, and I'm going to keep trying to do these, and I've got someone who's going to star anything that I missed. But let me say this before I dive into the pricing models. There is no perfect pricing model. There's a lot of chatter out there in the world about, you have to use this one or you have to use that one or avoid that one at all costs. I don't think there's a perfect one. I would not default. I would actually decide based on the circumstances of whatever it is you're pricing and who you're pricing it for. And you can apply a mix of models, which I'm going to talk about, and I'm going to give some concrete examples of those. So these are all the things that I weigh when I'm pricing out a project, or if I'm pricing out anything that I'm doing on the consulting side. So I think about the scope. What does it actually take to help them achieve the outcome that they want to achieve? I think about the complexity of a project. So how many moving parts are there? How many folks have to actually be involved and engaged? How many folks have to approve things? Sort of all of those things that can add layers and layers of complexity, which affect the price. I think about the duration. So I might think of pricing something in a very different way that is a 3-week, 4-week engagement than some engagements I've done, which are 3 years, or one I'm doing today, which will not end. And I believe it's been 6 years. So there's different ways I think about it depending on how long it goes, because the longer it goes, the more uncertainty gets inserted into the process. And I have to think about that when I'm pricing. I also think about the context. So is there anything going on internal to that organization or company or in the larger world that I have to know about when I'm thinking about the price? So if something is, there's things that I was working on for a while that were related to a major shift that was happening in how some of the folks that I work with get paid. I have to know that, and I have to know sort of what the urgency is related to that, because I'm going to think about that in terms of my pricing. I'm going to think about, is there anything else that I need to know that would tell me that a price should go, one direction or another? The last two are sort of the people part of it, which is I have to think about the client, and I need to think about what it's going to be like to work with the client. Are they easy, pretty straightforward, no fuss, no muss, and we're going to jump in and we're going to get this done? Or when I'm in a discovery process, are the leaders, playing ping pong and they can't figure out, who, what the actual decision is? I need to know that in order to come up with my price, because my ability to help them achieve an outcome depends on what I think it's going to be like to ultimately work with them. And usually you see enough at the beginning. I call it truth in advertising. And if you see that there's going to be some things that are going to impact the work that you're going to do with them, then believe it. And if it goes any direction, it usually goes up. That's been my experience. And then the last thing, kind of like Shark Tank. That's funny. Someone asked if the slides will be available. The slides will not, but the training is. So you'll be able to go back and review the training and forward to any of the slides that you want to see. Okay. And actually, so I'm sorry, the last one was you. I skipped the most important part. So the pricing model that you pick, also you have to think about who you are and what you're willing to do. So I know that I don't have a problem having difficult conversations with clients. So if, the scope blows up or they want the scope to blow up, I don't have a problem saying, hey, that's going to have an impact on the budget. Let's have a conversation about that. A lot of consultants that are not comfortable doing things like that. So you have to, when you look at each of these pricing models, you have to think, if anything, am I going to be able to comfortably do the things that I need to do to be able to manage being paid under this pricing model? Or maybe you're not comfortable, but it doesn't matter. You're going to make yourself do it. And again, it all completely varies depending on who the client is. That's why these easily work together. But yeah, as Ellen was saying, it's easy to jump in with a client without a deep understanding of the currents and challenges that exist and the challenge and the ability of that. Yeah, all that stuff. You can see what Ellen was talking about here. That's true. it's true a lot. And so I need to know what the reality I think is going to be with that client. And then I need to know what I'm willing to do or not willing to do to handle it. I often work with, there's another consultant who I work with a lot. And the joke is she handles the details and I handle the people. And so she's willing to work on things where there might be high drama with the clients simply because she knows that I'll handle it. Someone asked, does the pricing need to reflect my previous experience in consulting in my industry? Because I have none, as I'm recently out of university, but I know what I have to offer. As long as you can demonstrate to people that you can help them achieve the results that they want. Now, that's going to get easier the more you do and the more experience you have. But as long as you're able to clearly articulate the value to them in a way that makes them believe you, then your price is about helping them achieve that outcome. So it's really about being able to talk to them about what you can do. Now, there is, when you go into your market, so I'm in healthcare and I can go into the healthcare market and I know that there's some consultants who charge, very little. There's some consultants that charge an astronomical amount, and there's everything in between. So the range is wide. What I have found clients are interested in is the folks that they believe will actually get them to achieve the results, and that's what they're willing to pay for. And so if somebody is newer or they don't have as much experience, as long as you can give them the results and the experience they want, and you can convince them that they're going to have that, then your price should match what that is, not what your resume says. I have a nice resume. I spent all this money to go to a really good university. No one has ever asked me what that university is. Never once. Nobody asks me where I used to work, by the way. Now, some people actually in my field know where I used to work, but it never comes up. What we have a conversation about is what they need and whether or not I can help them understand why I'm the right person to help them with that. Okay, so let's dig in. I'm going to do these 4 pricing models. The value-based pricing, which is where you get a defined fee based on the value of the outcome for the client. And flat fee pricing, which is getting paid a flat fee for a defined scope of work or a defined set of deliverables. So it's one price that you get. And by the way, these two could be blended a little bit. But basically you say, here's what's going to cost for me to do this for you. And then there's retainer pricing, which is typically getting paid an advanced payment and there's different ways that retainers work out. So it's either a defined number of hours, which is how I see a lot of consultants do it. And usually it's a up to amount. So I'll work for you, up to this amount over this period of time. And that's often when clients like a little more of a looser engagement, or sometimes it's based on availability. So in some firms that I've seen, you pay for their availability, but then often you pay for the actual work itself. Most independent consultants, it's usually based on, here's the amount I'm going to give you. I have seen folks say that most clients will never, you could just set a price that's essentially a retainer price that's based on the value to them. And they will never go past what you estimated the level of effort is. And I can tell you that about half of my retainer clients would have if I let them. That their appetite, particularly when they're getting value from you, can exceed what they're actually paying for. So I don't actually believe that just, set a really high price and then you'll never get up to it. I've had clients that would get up to that and beyond that, quite easily. So retainer, we're going to talk about that in more detail. And then hourly pricing, I did not knock that off because hourly pricing has a lot of disadvantages, but there are times where it might make sense. So this is where you're basically getting paid for a unit of time that you work for the client. And I'm going to dive into these in details. So a value-based price, and again, a value-based price is where you have to tease out with the client, here's what they think the value of that outcome actually is. So they want you to achieve, they want you to increase their revenue by X amount. They want you to hire a new, CEO that's going to be at this amount, like whatever that ultimate outcome is. And if you're lucky, it's quantifiable. And then you could say, all right, I'm looking at about 10% of that. You still have to, and actually, if you listen to my podcast that's going to be coming out next week, I go into this. You still have to make sure that it matches the level of effort that's going in, and it matches sort of the other variables that you'd have to consider. So you have to make sure that that percentage is actually worth it to you and you're getting paid the right amount. And sometimes it's not quantifiable, in which case you have to sort of do best estimates, look into the literature, see what you can get, and try and figure out, like, and again, talent loss was a perfect one that I was thinking about, because I've worked with clients on mergers. And that's where you can go into the literature and you can see, is there anything that tells me anything about what the value of this is? You can ask questions to the client. Again, in my membership, I did a whole training just on this, that went through what some of the questions are you would ask to get them to try and quantify it, or at least tell you how important it is so you can arrive at a price. The benefits of value-based pricing is it's predictable revenue. You know exactly how much you're going to get. It allows you to focus on what often most of us want to focus on, which is what's actually valuable to the client. And you often get either the whole thing or usually some portion of it in advance. So often what I've seen is you get 50% at the beginning, 50% at the end. I've actually done it if it's over a long duration where I've gotten 3 or 4 payments. But you get you get some money that actually helps you with cash flow, which is a lovely thing. It can enable you to earn more, because instead of just, and we'll talk about hourly, but instead of just, getting paid because the clock is ticking, you're getting paid for the value you're really giving, which is typically higher. And that allows you to scale up your business and potentially earn more income without having to kill yourself and work more. It also can give you more flexibility with your time, depending on the engagement. So if it's something where, look, we want to achieve this outcome, and you've developed the arrangement with them that gives you the flexibility, and what they really care about is the outcome, that can make your life a little bit easier. But it obviously it depends on what you've agreed to with them. So the cons are, you can still underprice yourself. So as I mentioned, you still got to look at it and kick the tires and say, am I going to be earning Burger King wages if I do this just because I applied a percentage to it? You really still have to think about, what's it going to take to deliver the outcome they said they want, the value they want, so that you don't lose revenue. And learning how to do value-based pricing takes practice. So it is something you have to learn how to do, and you have to learn over time. And as I said, it's not always easy to determine the value for the client. So, I had someone I was coaching that, the client definitely said, we want to make, X more, annually than we did previously. Well, good, you gave us numbers. Now we've got something to work with. But often it's not that. I've had value-based pricing where it's, we're a disorganized mess and it's burning everybody out and we hate it. And so I had to do a little digging with them, as well as looking in the literature to say, okay, what do I actually think that's costing them? And then I have to articulate that value to them to get them to say, oh, okay, yeah, that sounds right. Not all clients are used to this model, or not all clients can do it. So I do work with a government entity that cannot do this and will not do this. So I have to decide, if I want to do work with them, is that okay with me? And some clients are like, well, how many hours do I get for that? So some of it involves clients that are a little more used to this, and some of this involves helping clients understand the value of this to them. So someone said, thank you. I love the kudos in here, folks. Value-based pricing might be easier to roll out to net new clients instead of existing clients. 100%. If it could take you a lot of time to try and convince existing clients, no, you really should switch to paying me more, and for these reasons, it might be easier if you get new clients to just start to switch to it. And I did that. Like when I started, I did I did hourly all the time. And then I just got to a point where I'm like, I only do retainer, and my retainers are all value-based, and people just got used to that. So someone asked about the literature. So this is where I might go into, depending on what it is. So let's say it's HR. There are journals that are out there and research that's been done and surveys that industry groups have done that look at some of the most common issues that are in that particular industry or with that, particular profession. So I will go to things like that. So I know, for example, for strategic planning, there is a survey that's done every couple years that looks at how many strategic plans actually fail. And they do, interviews across industries, how many never fully get implemented, and they actually have percentages. I use that when I'm coming up with a price. And I just had to go find who's actually looking at the failure rate of strategic plans and where does that information coming from that would actually help me price something. Oh, good. I'm glad this is easy to understand. Digging that. That's what I want. Okay, so when would I do value-based pricing? The short answer is anytime I can. I definitely would do it with a clear scope. I would definitely do it if the inputs to success are enough in my control. So if how I sold this to them is that I'm going to help them get this outcome, then I have to know that I can either control enough or influence enough to help them get that outcome, or I will lose credibility. Now, I never arrange payments so that I only get paid when they get the outcome, as a question came up earlier. But I need people in my market to know Deb delivers. And so if I'm going to do a value-based price, I need to know that I can have control over the outcome or influence it enough. If the price is high enough to manage some of the shifts and uncertainty. So remember I said complexity, duration, all of those things, anything that could inject uncertainty into the process or some maybe, shifts in what's happening. And I think the price is high enough to roll with that. Then I would do value-based pricing. I have a retainer right now that falls into that category because there are a lot of shifts and there is a lot of uncertainty. And me having a retainer with the client is valuable to them because I can help them navigate that and roll with that. And I would suggest if you learn more about value-based pricing and you learn how to do it well, shifting towards it does make a lot more sense. And learning how to ask the right questions to try and get at the value to them, and assigning a dollar amount. And the more you experiment with that and the more comfortable you get with that, the more I would say, yeah, do some value-based pricing. So someone said, any go-to statements that work well to redirect client sessions from hourly billing when they tend to ask when you are wanting to switch to value-based pricing. So if you're an established consultant and they really want you, it's easy, in which case I actually, by the way, I don't tell clients that my retainer is a value-based retainer. That's nothing, that's sausage making. They don't need to know that. What they need to know is that they're going to get the outcomes and they're going to get what they want out of it. So I just call it a retainer. And because I was established consultant, I could say, oh, by the way, I'm only doing retainers. That's what I'm doing going forward. And anybody who still wanted to work with me said, okay, that's cool. We'll do that. If you're less so, essentially what you can say is you can talk about the advantages of it to them. And again, I wouldn't call it value-based pricing. If you're applying value-based pricing to a flat fee, so it's a single fee, but you've added adjustments based on the value that you've figured out with the client, then they just know that they're getting a flat fee. And what you can say to them is, we know what the work is. This is an efficient way to do it. You'll have a predictable expense, which that's usually a big selling point for clients. And usually they're fine with that. If it's a value-based retainer, again, I just tell them this works best on a retainer basis. That's going to give you the flexibility you need. It's also going to give you, a predictable expense. That's the type of language that I use when I'm helping them understand that. If they are just stuck on hourly pricing, and they don't want to budge from it, then you have to make a decision, do you want to do that? Or you could say, I will do that now, but just so you know, as of this date, I'm going to be switching to a new payment model. And if they have a wonderful experience with you, then they're more likely to do it. But that's the choice you have to make. Excuse me, I got a cat in the background that thinks that she's the star of the show. She does. She loves value-based pricing. Okay, so let's talk about flat fee. Now, again, a flat fee, it could have what I call value layers on top of it. The flat fee is basically saying, here's the work, here's what the scope is that we're going to do for you, or here's the deliverables associated with it, and you're going to pay us X amount. And the beauty for you is, again, it's predictable revenue, so you know how much you're going to get. It rewards you if you're highly efficient, and particularly if you can deliver the scope in less time. And I learned this the hard way when this was actually, well, I can't remember if it was last year or the year before, when for some reason, there was a client that I had still been doing hourly with, and I knew them extraordinarily well, and I knew the topic well, and I knew the process well. And so we established at their request, a not to exceed amount, which they were absolutely willing to pay. Well, I'm so efficient that I got it done in half the time. So I got half the money. So what that meant is when I first started and I was greener, I got paid more than now when I know more and I'm better. And so that's not what I want. And that's one of the problems with hourly. So if you set a flat fee and you're really sure that you can get the work done in that particular scope and time frame, it rewards you for that. Typically, you can get an advance payment. So sometimes you can get a payment up front. I typically ask for that. If they want a deliverables-based contract, which I don't love, where basically every time you give them something that triggers payment, that's when you get paid. If you do that, you just have to make sure that the clarity around what those triggers are explicit in the contract. So who has to approve it so that triggers payment? Don't wait until you're in the engagement. The cons are you can still underprice yourself, and if you underprice yourself with a flat fee, then you're going to lose revenue. If the scope and the context shifts or something becomes uncertain, you're going to have to renegotiate, and you're going to have to say, hey, what I typically say is, okay, I understand that that's a shift that you want to talk about. Let's talk about what that is, and then let's see what that does to the budget and the time frame. So I signal to them, hey, guess what? We're going to have a conversation about timing and money. If you're not comfortable doing that, then you gotta think about whether or not flat fee is right for you. I'm really comfortable doing it. Tricky client conversations is kind of my thing. And then you may get paid less than the value you actually provided if all you're doing is pricing it based on the scope and you don't include any additional amount of money in the fee that's related to value, which you definitely can do. When would I do it? I would do a flat fee. Again, I always do a value-based flat fee if I'm doing a flat fee. But if the work's more technical in nature and there's enough certainty about what it actually takes to achieve what I promised we were going to achieve. I love it for shorter durations. I would not at all do it for a project that is taking 3 to 6 years, because way too much can change in that period of time. If I'm charging a day rate, so for some of the folks that do training and facilitation and things like that, then a flat fee for a particular day rate can make sense. Or if it's a discrete service, like they want me to come on site to do something, then, it's a discrete thing. I know exactly how much it is. I'll charge a flat fee for that, and they can kind of use me as they want to, or we can have a defined scope. Someone asked, what do you think about pay-as-you-go pricing? I heard several consultants having this as their pricing model and wonder why someone would do this. So pay-as-you-go, and say a little bit more about that in that. So I have seen that with hourly, where you get paid monthly for whatever it is that hours that you accrued that month. I've seen it where it's a flat price, and at regular intervals there's payments for that. I've done that when a client needed me to do it for budget purposes. So they needed to span 2 fiscal years, and I did that for them because I love them and I wanted to work with them. But those are the only pay as you go models. But tell me if you're thinking something else, and then I'm happy to answer that. Okay, retainer pricing. I love retainer pricing. That is my bread and butter when I do my consulting. I love it because it is a set amount that I get paid over a period of time, and it's predictable. It's recurring revenue. I get an advanced payment, which I love. Some clients, for some reason, stumble with that and don't give it, but most clients, they understand, Deb gets paid this much every month. More flexibility. So again, one of my biggest retainers that I have right now is a client who I adore, and they need a lot of flexibility because stuff comes up, and I act as a trusted advisor to the CEO, and this gives them that flexibility. And if they need me to jump in and facilitate a dicey conversation, they have the flexibility to do that. And I also like it because it's interesting. The amount and the pace of work can actually vary. Now, that only happens if you don't promise to roll over the hours that you work. And so with this client, when I have retainer pricing, if I get the sense that their appetite is going to exceed what I base the price on, I will have up to number of hours. Now, that means that they're able to calculate my hourly billing, but in that case, I don't care. But that's protecting me, because often what happens when clients hear retainer is in their head, regardless of what you put in the contract, they hear unfettered access. And I don't want them to hear unfettered access. So I want to make sure that they know that there are guardrails, and I specify what those are. It tends to shift the risk to the client. This is the other reason that I like retainers. I have worked with folks, lovely, wonderful, well-meaning folks who can't seem to get their act together, or they can't get in a room and make decisions, or too much is distracting them. And if I'm working hourly, I'm doing this stop and start stuff, or if I'm working on a flat fee with deliverables and my payment only gets triggered with those deliverables, and I can't get them to approve it, then I'm basically, that hits my cash flow. This shifts that risk to the client, and it makes it in their interest to keep things cooking with you. And as I said, it can also be value-based. You have to, the con of it, it's not really a con, it's just a thing to know, is that it requires ongoing management of client expectations. They have to know, this is where it's not perceived scarcity, it's perceived value. You want to make sure that it's your job, that they constantly feel the value of having this retainer. And so I do that. So when I'm talking, with, one of my retainer clients, and she's like, oh my gosh, I appreciate so much that you could jump in and do that. I said, it's one of the benefits of a retainer. If I am working with people on her team, I make sure I come back to her and she knows what I'm doing. So she's not like, am I paying Deb for nothing? It's my job to make sure that she always perceives that what I'm doing is valuable. Sometimes it's difficult to get more clients are a little more familiar with retainers than they are with other types of models. Some who are used to hourly, don't get it. But that's a decision you make, and you can articulate it to the client such that they understand that the benefit is to them, that they have a predictable expense. They might have more flexibility. If you can help them understand it, often they'll say yes. So pay as you go, each step of the process, oh my goodness, that sounds exhausting, would require a payment based on the value of service and outcome rendered at the time. Yeah, that sounds exhausting. I'm just going to say it that way. So getting payment from clients is often smooth, and it's often not, and sort of everything in between. And so I don't want to be waiting for payment when a thing happens, or when they get a particular outcome, or they get a particular service. I would rather have it in chunks. that helps me with budgeting on my side, that helps me with cash flow. I can understand if they don't have the money to do it, but what I would rather do instead is do a smaller contract, smaller scope with clarity about when I'm going to get paid. And then if they want to do an additional scope, I would do an additional scope. But I can understand why folks might say yes to it because you want to get some money coming in, but it sounds like a lot of work that you would be doing that could be work that you're not getting paid for every time you have to stop and say, hey, look, can I get money for that? And maybe it's more sophisticated than that, but that does sound exhausting. So somebody asked example of how much I would charge per month. It really depends on the client. So I have ones that are in the 5 figures. I have ones that are in the 6 figures. And it depends on what the work is, what my availability is, and what I'm doing for them. So the share what would constitute the basis of retainer, like how you would actually calculate it. So that's more than what I can do in this training. I'm so sorry to tell you that. I do have a way of actually looking at it. If you actually listen to my podcast that's coming out next week, I talk about the layers that I include when I'm determining my pricing. And I'll just give you a little teaser for it where I first look at layer of effort because that's the floor. And I want to make sure that I'm at least earning what it takes to actually do the work. And that's true with retainers. And then I add what I call drama padding. That's kind of stuff about the client or the environment. And then I add, things that are related to, the unique circumstances of the situation and market intel. So I can't go into all the details of how you actually do build it. But if you listen to the podcast next week, you'll hear me talk about some of the specifics of how I build it. Okay, so I imagine many of us have encountered, we want hourly billing for this project deliverable because it's the least friction and cost for us to get started. I would say that that's a question of where you want to draw the line in the sand. So again, if you've got a lot of other clients that you can go to and you say, look, this is the only type of billing I'm doing and here's why, and you're willing to say no to a client, then that's fine. If you really want to work with them and they only want to do hourly billing, then you have to decide, well, do I want to say yes to that? I usually try and convince them otherwise, and I will talk about the advantages to them. And I will talk about the advantages to them being that, what I am ultimately bringing to you is worth more than a unit of my time. I want to make sure that you've got the flexibility. I want to make sure that you know exactly how much you're spending and you know what your budget's going to be. Those are things that I say. If they push it, then I probably raise my hourly rate so that it accommodates the other things that I would typically bake into a retainer or value-based pricing. Okay, so when would I do retainer? I do it early and often when I'm a trusted advisor for, let's say, a leader, typically a CEO. I definitely always do a retainer. If a client wants a piece of me, not to sound too New York, but if they want a piece of me and there's not a lot of me to go around, then I'll say, I'd be happy to do this for you, but I can only do it on a retainer. And I haven't had folks say no to that, but I'm also well established in my market. But if they want to carve out some of my time, make sure they get me, then I will say, that's great. Happy to do that. Let's get a retainer arrangement on the book. Definitely if my time is rare. And I also do it if I want to shed clients. So if there's clients that for whatever reason, I don't think that makes sense for me to continue working with them, and I know that they won't do anything other than hourly, this is also a way that I can move on. There are more direct ways to do it, but that is one way to do it. Okay. Hourly pricing, we all know what that is, right? That tends to be the default setting. So the surprising thing I will say to you is sometimes it might make sense, and there are pros. So in some instances, it can help you assure that you're actually getting paid for everything you do, especially if you're in a context that is highly unpredictable. And so again, I'm thinking of a project that I did over the course of 3 years. and there were so many shifts and turns and and there was 10 team members working on it, that duration, that complexity, that unpredictability hourly made the best choice for us to do that, to make sure we were actually going to get paid. And there were so many layers of approvals for anything else that we thought this makes the most sense to do this. It's often easier for clients to wrap their head around because a lot of clients default to it. I think that's changing. And as I said, some clients like government entities, not all government entities, will only pay that way. So if you want to do that work, often you have to default to that. The cons are huge, which is your value is not your time. Your value is the results and the experience that you can give a client. And so you're being paid for the thing that actually isn't valuable. Your income's always going to be limited because you only have so many hours in the day, and hopefully you have other things in your life that you love. And it also is going to diminish your ability to scale your business without working more or killing yourself. I also don't like it because it puts you at the mercy of being paid until the end. And so it delays your cash flow, which I'm not a huge fan of. Okay, again, here's where I would do it. Ton of uncertainty, long horizon, very complex. If I had a big team, if I had to, because I really want to work with that entity and they can't do it a different way. But often what I'd like to do is I would like to do a mix where maybe there's some things I do hourly and there's other things that I do with a different model where I'm really trying to mix the benefits for me and my client. So maybe I'm not only doing it that way. And again, depends on the client in terms of what they will say yes to. I love mixing and matching, so I might do a flat fee. And if I get the sense that the scope is going to change a bunch, I might say, here's the flat fee for the scope that we agree to. And then here's an as needed bucket of hours that if we need them, we can use them, and otherwise we won't charge them. And I do that particularly if I don't want to stop and have to do a contract amendment, and I just know that the hours are there if we need them. I might do a retainer for doing the, strategic advisement for leaders, and I might do, a value-based flat fee for a particular project. And I have actually seen some consultants do bonuses where if you exceed certain targets, like revenue increase or whatever, that they might pay you a little bit extra. That's upside risk, which is the only time I would ever do anything that has financial risk. So then what you do is you create sort of a play price as you think through, what you want your life to be like, how you want to deliver services, what models you think might make sense to you, and you create a play price based on those. And this is where you're looking at the value of what you offer. You're looking at market intel. So what is it that folks are charging in your market? And I have found if you can go out and talk to people in your market, people tend to be pretty generous with that information. I actually tell other consultants. You want to think about your position and brand. So are you a premium consultant or are you bargain bin? And anybody who's on this call, just promise me from here on out, you will never consider yourself bargain bin. I would say, look at what the range is in your market, cut it in half, and never be in the lower half. and basically make sure that you're able to deliver with excellence and give them a great experience so that you've got a position that actually earns that price. You want to think about profit. So this will be the other things that I will apply to a play price. It's not just to cover my expenses. I also want to make a profit. So I think about what that is, and I include that in whatever this price that I'm playing around with is. And then you do have to consider bad debt. Now, I, in all my years of consulting, have only had one time a client didn't pay, and with many attempts did not pay. And unfortunately, that was hourly, so I was at the mercy of them paying me. But it does sometimes happen, so I usually like to include a fudge factor in for that. Somebody said, I've noticed in my business a trend of increasing payment delays with different vertical markets, whether payment delays. I've seen quite a bit. Definitely saw them a lot, particularly at the height of the pandemic. But yeah, that's a great idea to do. How do you work with either preventing or mitigating those payment delays. That's a great idea. So maybe I will do a podcast or another training on that. Okay, so the test and refine is one of the steps. So you're going to come up with a play price that you think is about right, and it's going to have all of those inputs to it. And then you do have to see what you can get from your market. And I don't mean go to your market and say, here's my price. Do you like it? But really to go out and say, here's the type of folks that I think I want to work with. These are who I think my buyers are. Here's what I know that they're really aspiring to, and the problems they're trying to solve, and the demand that I think exists in the market. Here's what I'm offering, and here's the prices that I'm looking at, and get nuanced feedback about that. And you can go to people who could potentially match who you think your buyer would be. You could go to other consultants. You could go to folks who also work with the folks that you want to work with. So you could have conversations with, folks that are their financial advisors or their lawyers or et cetera, and get a sense, because they often know sort of what that looks like for that, for that particular type of buyer. So you might make adjustments based on what you actually hear. You might hear that your range is a little bit different than what you thought. So you might bump yourself up a little bit, similar to what the person did when she found out that some nonprofits have money. And then you test it with prospects. So you don't assume if they say no that it's about the price, but you test it and you start to see the type of response you get. If it's about the price, they will often tell you, in which case that's helpful market intel to get. That doesn't necessarily mean you lower your price. That might mean that you're not describing the value of this well enough that they get that the price actually matters. But it's important intel to get to make some decisions about. And then, when you're talking to your prospects about price, it's the one thing I would say do above all else is don't start with the price. Because if you say a price, then all they're doing is saying, do I like that price or do I not like that price? There's no context for them. So always lead with value. You've got to know your value. You don't list the price first. You talk about the value and the results they're going to get. You talk about how you're going to get them there and they're going to believe it. And you talk about why it makes sense for you to help them with that. And then you talk about the price. So now by the time you get to the price, it has a context that they can say, is that worth it to me? And then also plan for your weaknesses. So the one thing I tell people to do is never say your price the first time when you're in front of a prospective client. Practice saying it. Practice saying it in the mirror. You want to get the muscle memory of saying it, because it is amazing how you could open your mouth and a lower price comes out. So you actually want to make sure that you've said it before and it kind of flows off your tongue. And I say it very matter-of-factly. I'm not like, oh, well, here's the price, or I'm not apologetic about it. I say it very politely. I don't give apologies. I don't say, or if that's too much, I could discount it. I did that a bunch at the beginning and for no good reason. And then I pay attention to my mindset. Am I like tripping myself up anywhere such that I'm not willing to say what I know is actually reasonable? So overcoming client objections, I'm just going to hit upon this quickly, is one is anticipate. Think about, what do I think that they might say no to? Are they going to say no to the pricing model? Might they say no to the price? Do anything you can to prevent it. So if you think that they're going to say something about either one of those, when you're talking to them, proactively describe the value of it before they ask about it, so that it's not you having to respond to something they said. You've proactively thought about it and said it. And prepare. My superpower as a consultant who earns a really good income is my preparation. So I don't leave anything to chance. I think about it ahead of time. What do I think I'm going to hear in that room that could lead me to either a no for the whole gig or lead me to a no on the price? And then what do I need to know and do and say to try and prevent that? So value seems ambiguous. So it's something you have to define. So value for a client are the results that you can help them achieve and the excellent experience that you can give them. You have to decide in your market for the types of results that you can help clients achieve and the type of experience you can give them. What is it that they have a demand for, and what is it that they're willing to pay for that? That's the value to them of what you do. And so it's not just how you think about yourself. It's not just, doing a bunch of calculations and saying it has to be a fit for what's in your market. And that's how value is defined. And by the way, I have been hired where there might be other consultants who can help achieve the same results I can, but they want me there because they think it's enjoyable to work with me and I give them a really good experience. That's why it's the two of those things. But that's a great question. You got to define very precisely for what you do in your market, for your buyer, what do they think value is? And that's why having a value proposition where you're able to just define that is clear. When you signed up for this, you should get one. If you didn't get your value proposition tool that lets you walk through how you define your value, just write tool in the comments and I'll make sure you get one. Okay, so that's generally what I wanted to share today about pricing. There is so much more we could get into, and I love talking about pricing because I always want people to, maximize the wonderful, good things they can do for clients and get paid really well for it. But here's the special offer I wanted to suggest to you is that if you need more help, so if you really want to get to the fun part of consulting, which the part I love, right? Which is I get to do work I love. It's on my terms. I get to have the income I want. I never, ever worry about income and haven't for years. And I get to have the life that I want. So when I'm done with this, I'm actually going to my garden and doing fun things. If you want that and you want to get there faster, there's all kinds of free things that you can tap into that I offer. So the podcast, I got tools, I got blogs, newsletter, all sorts of things where I try and make sure that people get what they need to help propel them faster. But if you want more, I do want to invite you to the Craft of Consulting membership. And so the Craft of Consulting membership, the whole point of it, I realize I misspelled it on the last slide, is to help you get more clients and more income more easily and with more confidence. That's really in a nutshell what the purpose of the membership is. And so what happens in there is you get direct access to me and personalized support. So any of the questions that folks asked in here are some of the things that we talk about inside, and we go deep into it. And so you get personalized support from me. So if you've got to figure out how to price something, then you put up, here's what I'm thinking about, here's the inputs that go into it. And I'll give you some personalized videos back that'll say, consider this, go look at this, describe this to me until you arrive at something that makes sense to you. We do the same thing with getting clients, proposals, you name it. Also, there's a whole bunch of things you can tap into that will help you make better decisions and increase your skills. So some of the business side of consulting gets easier. And then you get like a cheering section. You get me, you get other consultants in there who are trying to figure this out and who really support and encourage each other to stay on the path. And I got a few folks on here who are from the membership who know what I mean when I say that you really have encouraging folks in there to make sure that you don't feel like you're trying to figure this out all by yourself. So you get the rapid responses from me. There's group coaching monthly, and then we do a number of things in between. There's training. So I did a whole training on value-based pricing, fixed pricing. I'm doing retainers next, where we go down into the details, including what questions you should be actually asking to try and arrive at a price. And then all kinds of tools. So I get teased a lot where people are like, oh, how do I do X? I'm like, I have a tool for that. And I typically have tools and templates that help people do things much faster. And so members who are in there are having a great time. They're saying, oh my gosh, I got the client. I did what you said. It actually worked. They're loving being in there together. They're turning a corner and getting past roadblocks. And again, not losing hope would be the other thing that folks are talking about in there, because folks are supporting each other, but they're getting more clients, they're getting more income in, and they're getting the support they need on a regular basis. So this is someone who's like, I've tried other platforms. This one is better. Love it. Get tons of value. This person loves all the tools and templates and everything that I have in there. And so if you're interested, you can apply for the membership. The cost is $187 per month. You can get a 20% discount if you want to pay for the whole year. I do have a free mini course that helps you define who your buyer is and your value proposition. So if you apply by June 2nd, you can get access to that for free. And then the last thing I'd say about it is I want to make sure that for everybody, the membership is right for you. So you get to try it for free. If you apply and you get accepted, you get to try it for free for 30 days. You get to see if it's a fit. If it's a fit, stay. And if it's not a fit, I hope you got a lot out of it and everything's okay. But I want to make sure that you get value out of it. That's why I let you in there for free. And this is, by the way, different than offering consulting services for free. This is really something where I want to make sure you like it. And if you're in there, then it's going to be about you pricing it to make sure you get paid for everything that you need to get paid for. So this is how it works. Submit an application. I'll let you know within 3 business days. I usually am faster than that if you're approved. And then if you're approved, you enroll, boom, you get going and you get your 30-day trial to see if it's a fit for you. And that is how you apply. But I want to thank everybody for joining. Love to have folks on the membership. I will be doing more trainings like this. We go way more in depth in the membership itself, where we'll be able to go through some of the nitty-gritty detail. But thank you so much, everybody, and look forward to having folks join me on other trainings and hopefully in the membership itself. And everybody who said tool, don't worry about it. I'll make sure you get the tool.